Welcome to another episode of Straight Talk on Stocks with Kevin Hurley, managing partner of Hurley Investments LLC, and Jeffrey Dunyan, CEO and owner of Safe Option Strategies. We are just a couple of guys that like to shoot straight with you and tell you about what's going on in the market, why it's going on, and most importantly, what you need to do about it. Straight Talk on Stocks likes to mix in a little bit of politics. We occasionally mix in a little bit of sports, and sometimes we just like to tell you what people are doing that really ticks us off. Thanks for joining us for another episode of Straight Talk on Stocks. Kevin, how you doing this morning?
Hey, good morning. How are you doing today, Jeffrey?
I am doing fantastic because everything that I trade except for one stock in my portfolio is up today. And even though it's not huge, I'm seeing the Dow's up 127 right now. It's been up as high as what, 180, 190 this morning at one point. Still,
totally overdone, right?
100 points up is 100 points up. I'll take it.
Man, I think it's totally overdone. I saw the news come out today for Apple that they're cutting 10% of their iPhone making capabilities, which should affect all the suppliers. Yet you've got Micron up and you've got Apple up, and I'm looking at the stock market, I think
Micron is up
far too fast, and now I think it's going the other direction. Going up too fast, too quickly, with some stocks that shouldn't be.
Okay, but Micron is up because of an upgrade that had nothing to do with anything Apple is doing. Micron got an upgrade from someone, and I do think on Micron, I'm mentioning them because I trade Micron, and you mentioned them. I think Micron being up 6% is an overreaction to one know-nothing, nobody analyst upgrade. I mean, let's be honest. When an analyst from a company that no one outside of the CEO and secretary have ever heard of gives you an upgrade, and then the market reacts to it the way it does because CNBC and Fox Business News and Yahoo Finance and Bloomberg, they all mention it. No one cares that you know nothing about what you're talking about. All they want is the headline: analyst upgrades Micron. So I think it's an overreaction to Micron, but and the thing about Apple is, in spite of the news you got coming out on Apple, whatever news you've got coming out on Apple, here's the reality. They're trading right now at about 12 times earnings. You've got non-growth companies. I heard someone on TV mention this morning, I don't know the name of the company, but whatever New York's biggest electric company or public utility company, they're trading currently at 18 times earnings. You've got other companies that have never been and never will be growth stocks that are trading at 17, 18 times earnings. You've got Apple trading at 12. And right here's what I think is going on right now with Apple. The reason Tim Cook, and we talk about Apple a lot because they're such a huge company. A few months ago, they were the first company to hit the $1 trillion market cap. They're still second or third, maybe fourth in terms of the biggest market cap companies. They've been passed up now by Amazon and Microsoft, I think.
Amazon, Microsoft, maybe.
I think they're still I think they're still ahead of Google because Google took a similar hit recently.
They're ahead of that.
Anyway, the point I'm making is this. Like him or not, and I'm not a huge fan of him, Tim Cook did a smart thing when he said, we're not going to report in our quarterly reports anymore. We're not going to report on the number of iPhone sales. Now, I read two things into that as an average consumer, an average user of their product. There's two things that I see coming from that statement. Number one, he knows the number of new iPhone sales is going to decline. He knows it's not going to be as big, and that quarter after quarter, that number is probably going to be down. Phones are lasting longer. They're built better. They're expensive. People are less inclined to rush out and do an upgrade. Kevin, you and I have both been iPhone users for a lot of years. We've both been on the iPhone almost since it came out. I think I used Android for a year and then said iPhone is way, way better. So right. I used to upgrade as soon as I didn't have to wait in line for the upgrade. Upgrade would be announced in September. The lines would form at the end of September, and I would wait about a month when there were no lines. I would go in and upgrade my phone. I did it all the time. Every time there was a new iPhone, I wanted the newest, latest, greatest. I'm sitting in an iPhone 8 Plus. When they upgraded to the 10, I left it alone. It was too expensive. I didn't want to spend the money on it. I didn't care for the upgrades and the technology difference. Now they've got their XR and their XS, kind of the revamped 10, sort of the upgraded model of the 10. I have no desire for it. Most of my family has a 7 or a 7 Plus. I have no desire to run out and upgrade them. The cost is too much, and it's not that much better a phone. So this is one of probably a number of reasons why the phone sales are going down. But here's the other reason, and to me this is the more important one, and to me this is what more investors, real investors, people who take time to study the issues, not the day traders, not the people that made millions of dollars in hedge funds but don't know anything more than you and I know, because they're looking at the same websites and they're reading the same articles that we are, and they made a ton of money because they got very aggressive in their trades in a 10-year bullish market. So I'm talking about the people that really get in and study this stuff, recognize that Apple is evolving. They are no longer a one-trick pony hardware company. They're no longer just a provider of iPhone. They're doing like Microsoft did. Microsoft was a little bit ahead of them in this. They're getting into cloud-based stuff. They're getting into services. They've got their Apple Pay. They've got iTunes. They've got all this stuff that is unrelated to whether you got an iPhone in your hand or not. They still make a ton of revenue on iPhones. They still have a huge following for people that are on iPhones. Eventually, when 5G comes out or whatever it is, the next generation of stuff, I'm going to upgrade because I'm going to have to. The older phones aren't going to handle that network, and I want the speed. I want the instant speed of that faster network. So I'm still going to upgrade. I'm going to upgrade when they've got the iPhone 15, and I can upgrade to the iPhone 10 or the XR, XS, or whatever it is for $50 or $100 and an extension of my contract. I'm not going to do it when I've got to go in and pay $1,000 for that phone. But I'm still going to be loyal to the product. I still like it better than anything I've seen out there, and so do most of the people that use it. So they're still going to make a lot of revenue and sell a lot of phones. They're still going to sell a lot of hardware, but they're bringing in money at pennies on the dollar when you talk about profit margins on their services. That's why Apple, that's why Tim Cook can say, "Hey, I'm cutting guidance by another 10% on iPhone production," and people are saying, "You know what? At 150, Apple's still a dang good deal. That's still a good deal for this stock." Okay, I'm off. I'll get off my soapbox on Apple.
You're the practical person. I'll be honest with you.
I'm a freaking genius. I'm the smartest man. I'm the smartest man in my office right now.
I'll be honest with you. I'm going to go spend $1,400 on an XR Plus. I want the extra memory.
Okay.
I'm going to run it over the 2-year period where you lease it till you own it, so it's spread over 2 years, and yeah, it'll be like a $45 payment. I really like it. I've got friends that have it here in my area. It's an amazing phone, some new software, a better camera. So my question is, and I'll be honest with you, I'm going to get it because I'm an iPhone snob. I golf with Pro Vs. I want the newest, greatest, best phone, but I'm doing it for 2 reasons. One, because, as I said, I'm snobbish that way. 2, I know the new stuff's coming up down the road, so I'm just going to pawn off this one off on a kid and, juggle the Hurley Investments phone plan so that I can get this other one. And I'm going to upgrade to the next one in a year anyway. So the question I'm getting at is, has the newness, the Apple phenomenon of everyone lining up for days and sleeping outside, has that worn off enough where people are becoming more practical with their phones? Or is there still enough of that, hey, I got to have the newest and greatest and best side of things, that it can continue to push Apple's stock price up?
Okay, well, so I think I felt like I kind of, you see me looking around, I'm looking around for my pen so I can mark on this. So I feel like I kind of answered that already, and you're wording the question in a little bit different way, which is okay. I do that all the time. But but the answer is this: the number of people that are lining up, and this just corresponds exactly to what Tim Cook said. The number of people, the percentage of people that are lining up for the next one has lessened. You just perfectly made my point. I used to do exactly what you're describing. As soon as it was available, I would go get it. I was a little bit of an iPhone snob. I want, when I'm with my friends on the weekends, when I'm out on the golf course, I want to pull out of my pocket the latest, greatest, newest one, so that the guys that are still holding a little teeny tiny iPhone 5 are saying, "Oh, is that the new?" Look, I'll admit, I like having the latest, greatest stuff, but that has worn off for me because of a number of factors. And I think I'm not going to say I'm the norm or you're the norm. I think together you and I represent the norm. Some people are backing off of it. Some people are continuing to do that same thing. It's this evolution. But at the end of the day, if Apple is replacing that revenue where iPhone sales are new iPhone sales are dwindling, if they continue to replace that revenue with services that cost them far less money to produce and to distribute, and the profit margins are higher. See, here, I'm okay with that.
Well,
From and eventually, and look, I don't know if this is the beginning of a major move back up to the 200 mark. This right here could be the same as this blip right here before another big sell-off day. I don't know. It could be another blip like this before another prolonged sell-off. I don't know if this is reason to get back in and be all bullish on Apple. The bear run may have ended, it may not. But I will tell you this, eventually, whether it's this quarter, whether it's next quarter, I think it'll be before the end of 2019. Apple's going to get back on a run like this because people are going to start recognizing more and more and more that this is a service company as much as it's a product company. And you're shaking your head. I know you disagree with me, but let's have this conversation at the end of the year when Apple is trading at $300 a share at the end of the year. Let's have this conversation and let's see if they continue to sell off and be a drag, or if they came back a long way.
It won't happen. It's not going to happen. And I'm going to say it for every reason you've given us. You touted valuation. I'm sorry, that's an analyst justification on why the stock is or is not doing what they said it should do. We've seen Apple stay undervalued and have a valuation that's ridiculously low for years. And then all of a sudden it went from 225 up to 750 in like a 9-month period of time. It should have been moving along that whole time period, but no, it's got low valuations. It just didn't move.
When's the last time a company moved the way we think it should move? You got 90% of the people that trade are completely irrational. They trade on emotion. They trade on headlines. They trade on a lack of facts. But the point you made.
That's exactly why Apple won't move in the next year.
Yeah, it will. Okay, so we disagree on that. The thing, and I really, I see the grin on your face. You're disagreeing with me more to pick a fight and more to piss me off than because you really believe that. Because you know everything I'm saying is dead right on about Apple. They are becoming more of a service company, and they're look. If Apple brings in, I'm just okay. Quarterly, I might be off a little bit on these numbers. If Apple brings in 85 billion in a quarter revenue, okay, 85 billion revenue.
10 of it will be services and 9 of it will be pure profit.
Are you saying 10 and 9? That doesn't add up to 85.
No, because the rest is still the iPhone. It's only like 10 billion this quarter should be services.
Okay, and the rest iPhone.
10 billion will be pure profit.
Okay. So here's what I'm getting at. Let me finish this thought for a minute. Let's say next quarter, analysts think that should jump up to 95 billion, and it only jumps up to 90 billion, and so they have an earnings miss, but they go for okay. You're saying, if I can draw this, you're saying right now it's 90-10. 90% of the revenue coming in is the iPhones, a little bit of that is the Apple Watch, a little bit of that is the Apple TV, the other hardware, and you're saying 10% of that is services. If they hit
Right.
90 billion instead of 95 billion, and that's considered an earnings miss, but this starts to shift and this becomes 15 and this becomes 85. In terms of revenue, that 15% of services is coming in at a 90% profit margin, where that 85% of revenue is coming in at about a 5% profit margin. And if that
Right.
continues to shift, two things will happen. And I believe it'll happen by the end of this year. Two things will happen. Analysts who are idiots and always surprised by what happens, who never get it right. For all their brain power, they're constantly surprised by what companies do, good or bad. Oh, we thought 95 billion. We're really surprised they hit 90. Well, that's because you're an idiot and you should have known they would hit 90 billion. Okay, simple as that. As this starts to happen a couple more quarters, analysts are going to start shifting their expectation. They're going to start setting expectations in line with what Apple is going to actually do. And when people see a rising profit, even in the midst of a revenue that's not going up as fast as it used to go up, you're going to start seeing a hit on the revenue line and they're going to crush it on the profit line. And that's when Apple stock is going to take back off to the upside. And look, maybe I am a little bit optimistic that happens over the course of a year. Maybe I'm giving investors a little too much credit because a lot of them just don't know what's going on. But I forgive me for being optimistic. I think it can happen.
Well, I'm just going to say everything you just said has happened before, and it took forever for stuff to move. So I'm just, I don't give analysts that much credit. I think they try to find and pick on Apple. Apple has not been in the good graces of the stock market for years, in my opinion. So I just don't see them focusing on the positives. I think they'll focus and run with the narrative that iPhone sales are low for the year, and Apple will continue to generate $50 billion of free cash flow, $65 billion of free cash flow a year. And I'm sorry, analysts haven't proven themselves to me that they can figure it out and see how profitable and what a great company Apple is. I just don't see it.
I would somewhat agree. If you see me looking over off this screen, I'm looking over at my other computer screen. You see the Dow went negative?
I did not, but I was looking on my phone, and you know what I caught? Bezos, CEO of Amazon, with $137 billion, is divorcing his wife of 25 years. That's the text that came across my phone today.
He's trading in a 50 for a pair of 25s.
Something like that. Hey, I know we don't have too much more time because I got some things going on today. Really quickly, let's spend just a little bit of time on the market in general and on the fact of what happened last night, the fact we have FOMC minutes coming today. I was telling you yesterday, I kind of see a down day, but my reasoning was people wouldn't like. I don't know what my reasoning was. Give me a comment here. What's my reasoning?
Okay, well, I saw two things happen yesterday. Number one, we had another rally to the close. We talked about this a little bit yesterday or the day before. We had another rally to the close. The Dow at one point in time yesterday was up 300 points. I don't think it went into negative territory, but it got down a couple times during the day to where it was only up 50 or 60. I thought we would end around 100 points, and we had a pretty good rally to the close, finished up 243, 243, 253 points. That's happened a number of times in this recent run that we've had. That is I want to say fifth or sixth time in the last 7 or 8 trading sessions.
Yep.
I might be off a little bit on that, but where that kind of thing is happening, and you now have major technical crossovers. Well, I guess they're not quite there. If we finish positive, one more day like that, one more rally day like that, you're going to have an RSI crossover. You're going to have a 5 and 20-day moving crossover. You've already had the MACD crossover. Now, they did it here and here only to fall back down. But I was still pleased with that. Then I was watching futures when the president spoke last night, and we can't we can't not talk a little bit about what he talked about, and we cannot not mix some politics in here. Um, whether you like him, look, here's the thing. I know nobody is unaware of where I stand politically. I don't make any secret of the fact of which political side I'm on. I've got good friends that are on the other side. I've got students in my program. They're wonderful people. I love them. We have the same goals long term. We have different ways going about getting to those goals when it comes to some political things. I don't care what side of the political aisle you're on. If you want to be intellectually honest, and I worry sometimes that people on the left don't know how to be intellectually honest. And one person last night after the Dems had their rebuttal said these people are pathological liars. And they're the people who are accusing Donald Trump of always lying. What Donald Trump did last night was he gave facts. He gave actual numbers. He did not make up the numbers. The numbers are verifiable. If you want to say he lied about it and he made up the numbers, then you are not being honest with yourself, and you're not being honest with whoever you say that to, because he gave facts. If you want to deny that there is a crisis going on at our border, get the hell out of this country. I will buy you a first-class one-way ticket to a country of your choice if you will sign documentation that you'll never step foot in the U.S. again. If you honestly believe there is no crisis at the border, you're a damn fool. And you absolutely are talking from a political ideology, ignorant of facts, unwilling to state facts, or intentionally being intellectually honest. So last night, love him or hate him, love his delivery or hate his delivery, the president laid out facts. Then the Democrats got on the air and lied their asses off to the American people. They looked in that camera and they said things that were simply not true. They are not trying to compromise. They couldn't give a crap less about opening the government. To them, it is about a political victory. Democrats do not care one iota about the people that vote for them, outside of the fact that they keep voting for them. Now, you could say that about a lot of Republican politicians as well. I think it's more rampant on the left. Nancy Pelosi and Chuck Schumer look like a couple of villains from some stupid 50s or 60s cartoon. I mean, seriously, that they creep me out. Those people are straight up slime. They absolutely care about their power and their politics more than they care about doing the right thing.
Yeah.
My favorite part of now let's tie this back into the market, because I could spend show after show after show just going on straight up pure political rants. Let's tie it back into the market. It was a stalemate, because as passionate as I am about thinking that Trump nailed it and did the right thing, if you're a Democrat and you watched his speech and then you watched I got to come up with a name for him, because I can't even stand. I mean, Yzma and Kronk is the closest thing I can think of. That's giving Schumer way too much credit. But if you're a Democrat and you watch that, you think that Trump lied about everything he said and that Pelosi and Schumer absolutely nailed it. What I like this morning, even though the Dow dipped negative, it's back up 40, 50 points now. But what I liked this morning, what I liked last night, is it had little or no effect on futures of the market. And that's the way it should be. This is a political issue that should have no impact on the market. And 2 months ago, 3 months ago, his speech last night and their rebuttal to his speech last night would have sent the futures down 300, 400, 500 points. I think a fair amount of fear has dissipated now. It's not gone. It's absolutely not gone, but I think a fair amount of fear has dissipated. And that gives me a little more confidence that if we get these crossovers, technically, at least we're going to get back up in this 25,000 range on the Dow. We might stall a little bit.
So last thing right here, because I'm out of time and I got to run off to an appointment.
All right.
Double bottom or a V-shaped recovery? Your call.
I'm going to tell you V-shaped recovery, at least back up to the 24.5 range, maybe 25,000 on the Dow, similar percentages on the other indexes.
And I'm going to call. Go ahead.
I think we're going to hear what we want in the FOMC minutes. When we get those, I think it's going to be in line with what Powell should have said in December and stumbled over and couldn't spit out the right way, but what he reiterated last week that caused the huge rally. So I think that's going to be one thing. I think as we start to get banks report at the early part of next week, I think expectations are going to be more realistic, such that as companies start to report, starting with banks, they're going to hit their numbers better than they did in earnings season last quarter. So I'm going to say V-shaped bottom for those V-shaped recovery for those reasons.
Double bottom for every reason you said. On the opposite side of it, earnings are going to absolutely suck. Obviously, banks don't do well when people aren't moving in Thanksgiving, Christmas season. I think numbers are going to be down there. They're going to be low. Everything I've seen from hedge funds and bond funds, spreads, I don't think they'll make up their numbers through their trading floors.
I just personally think that gets offset by expectations. I think expectations have been lowered to where I'm not as pessimistic on it as you are, or as bearish on it as you are. I don't disagree completely with what you're saying. I'm just not as bearish on those things. I think that gets compensated for by lowered expectations.
That's giving analysts too much credit for something they can't do and they have done in the past.
Oh, thinking they can get out of bed in the morning and tie their shoes without assistance is giving them too much credit for anything. But let's be honest, occasionally you throw enough darts at the board, occasionally one hits. And that's what analysts do.
Where we end up.
Okay.
It'll be interesting. If you need to, call me tomorrow. I'll talk to you from the road if you can't get that guest on in to talk.
Where are you heading out to, by the way?
I'm to Brighton to go skiing tomorrow with family.
Oh, that's right. You're not leaving town. You're heading up to the slopes. Yeah, maybe we can do our podcast before you leave, or maybe we can do a late one in the day tomorrow. I may see you up there. I'm about 70% right now. It's going to depend on how much I get done today, and it might also depend a little bit on what's going on when the market's open tomorrow or how it finishes today. That sometimes determines what my workload is the next day with my students. So,
right.
Yeah, I might actually see you up there.
Sounds good.
Have a great one. Thanks, Kevin.
You too. Take care.
All right. Bye-bye.